fire now is closing in. Nothing to bear and nothing to win. Nothing to win. Could you believe? Could you believe? Could you believe? Could you believe? Take my hand, I'll take you higher than you've ever been. You've ever been.
Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same without wasting a single second of your time. Bada bing, bada boom, we go. And the weekly candle has closed, and we have closed beneath the support of the 30,270 level, which is a daily support structure that goes back to this drop back in June 9th, 2022 of that daily candle close, and all these resistance points in May of 2022 and the bounce of Sunday, May 9th, as well as some wicks from June 27th, 2021, June 22nd, 2021, and this wick over here in May 2021, and this January 2021 area here. So all these wicks and these daily candle close support levels is now, we have closed slightly beneath it, so we're seeing this possible reclamation of the wick at 29.30 𝗥𝗲𝗹𝗁 on the Coinbase chart. Let's go ahead and take a look at 𝗥𝗲𝗹 Capital. What is 𝗥𝗲𝗹? Well, people lock their liquidity in the charts to get burnt to a crisp by the market maker, and we get to see where those crispy characters lie in wait and or get burnt to a crisp. So let's go right into the 1 minute time frame here and update it. So as we meandered around on the weekend and talked about going sideways because the scant liquidity is easily appearing and taken by the market makers over the weekend, we did see a slight stab to the upside here at 30,412, or sorry, that was this pool here, these little characters at 30,402, 412-ish, and then it opened up some longs into that resistance, which is not a good look, and they came back for those 100x, and they pinged in some shorts as they went lower and took out the 100x some more, and it looks like they are coming to those 50x partners in crime down at 29,886, and their stacked up liquidity pools down here as well at the 29,724 region that they could come back to. And we talked about the reclamation of the wick idea. Let's go into the higher time frame of the external liquidity pools. Shout out to everyone here. Booyah. 12-hour time frame does not interest me in the slightest, so let's go to the 7-day. 7-day has pinged in both sides quite nicely by the looks of it here. It's very hard to tell which side is hotter. If you do come down to that 29.5 region, you do have about $5 billion down in that region. We have previously taken out a cool billion and a quarter here in this 29.95 region. Do we continue lower or start to spawn divergence? I would expect if we made a directional shift that we come at least to that 29.650 and 600, reclaim the wick in its entirety, and then possibly contemplate where it goes from there on this 7-day time frame. It looks like they're starting to build the pools up above as well, so let's go ahead and expand our vision to the external pool of the 1 month. The 1 month, previously we talked about last week this 40 billion that was up here at 31.7. They managed to get up to 31.6 and then sharply reversed into the liquidity of the 100xers and all those guys down here. It gives me the impression that they are going to come lower. On the monthly time frame, if you just zoom out and look at this monthly time frame as it stands with the pools on both sides, there's currently more to the downside than there is to the upside. Just look at the yellow region at 24.6. This could possibly cascade down all the way to a Bart Simpson event if it goes below certain levels. If it manages to get some divergence spawned off of the liquidity at 29K, then you could get this surge up. If we start to expand our vision to the higher time frames, you also see that on the 3 and the 6 month in terms of the heat generated down here at 24.2, the $100 billion that is now stacking up down below. As you start to see that chart on the 3 month and the 6 month. 6 month also has that $133 billion at 24.6, $153 billion at 24.3. Granted, you have some 100 billion targets up at 32.1 and 67 at 32.4, and this entire region is starting to get up in the 100 billion zone. So if these are market maker positions that they allowed to survive back here on June 15th, that's possible that they are DeFi projects and exchange positions that are here that they allowed to pass the scrutiny of the market maker. So those could be safe from purview, or they could just Bart Simpson down and grab them. I'm still new to this whole liquidity thing in terms of what positions they allow to remain, as they did down here at 18 and 19K. They allow these $50 billion unscathed, and same here, the 70 billion unscathed, and now here the 900 billion unscathed. Is that a position they're aiming to protect, or are they going to come back with a fury to that region? in the bullish narrative that we are seeing where the bulls are in control of this since January, it stands to reason that they would spawn some divergence possibly off the 29.1 region, this 32 billion here, and stop out all the longs from this consolidation to the upside, and basically then start to build a narrative structure to continue to the upside. If we go to the 2-year time frame, this is where the largest external liquidity pools lie, and you'll start to see that heat map up above. We talked about that $450 billion all the way on the price path to 33.2 that could be taken if the bullish continuation continues. So coming down into the 29.2 region, you'll get $61 billion on the 2-year time frame and 42 billion on the 28.8 region. So if you start to come back into this consolidation range liquidity and get that sell side liquidity, then you can go to the buy side up here. All right, so we were talking about going down to go up, and this kind of idea of the continuation. In order to have a sustainable move up to 33.2, you would need to retrace a little bit. So we've been waiting for this retrace for some time, so this is going to be possibly a juicy long if there is divergence spawned in a nice manner. Let's go into the charts and not waste a single second longer. As it stands on this pitch fan, we did see this rejection at the 0.65 of this mean reversion path to the upside, and we came down sharply past the 618, and we are kind of halfway between the 618 and the 0.5. If we come down to the 0.5 here on the Coinbase chart, that would be 28.9, just around 29k. So that would make sense to come back to equilibrium on this mean reversion path we are on. If we go to the Binance chart, we'll start to throw on our oscillators and see what's up. We're talking about this 236 idea. We have these 236 entry models for the bullish projection and the bearish projection. If you start to break 30k and start closing out candles on lower time frames beneath that level, that is your signal for continuation to these regions down below or up above. We did see a bounce and holding of that 236 to take us up into the 786 region the other day. Let's go ahead and throw on our oscillators and see what we can with the momentum. Boom. Link in the description for more, momentummaster.info. Tap features, toggle the toggle switches if you want to see what it looks like in its entirety, or you can take a look at each of the components as we go over them. So as it stands currently, we put out this idea of the cross down event last Sunday, June 2nd. And since that time, we did see a stop hunt rise to the upside twice, but overall on the daily time frame, it has been honoring this cross down event since this time. And we've been seeing the baselines casually suppressing the price into that retrace idea of that, and which this is why the baselines are a component worth taking notice of. What are they? They are your first sign of reversal. The baselines are one of the few leading moving average formulas you will find on the market. So if you look at this and this back tested level for them, they will translate across all the time frames. So if we go down, let's take a look at how the weekly held up, because it is the weekly candle close after all. All right, so we're gonna go to a clean chart and we'll come back to the fibs at a later time. I was looking at some fib stuff here. Boop. All right, so looking at where we closed the weekly, we closed the weekly just beneath the 200 weighted moving average on the weekly, and beneath the baseline we were unable to reclaim the fat boy, but we did reclaim the thin boy baseline, which could consider, if we wick down into some of the liquidity here and close out this weekly, we could start seeing this reclamation of the suppression that was occurring of the cross down events that were back on May 1st. So May 1st we had this cross down event that we talked about, the retrace, and had 1, 2, 3, 4, 5, 6, 7 weeks of downside as a result of that cross down event. So in order to negate that, we need to start reclaiming these baselines, and we have reclaimed one of them and some powerful adaptive moving average and possibly the 200 weighted moving average as well. So if we wick down into here, this would be a possible solid entry for a swing long to the upside to that 33K pool we talked about of the $450 billion and the external liquidity range that we could be coming back into. If we look at our oscillators, we are getting overbought on the Williams, and we are starting to taper here on the weekly stochastic at the 50 level. The money flow is coming beneath the RSI, which suggests you could get this kind of chill out and surge up back to the RSI here and come back in a fashion on the weekly time frame. We did have a 5-day candle close, if I'm not mistaken. Yes, we did. So the 5-day did close in a bearish state just below the the 200 weighted, as it did in the last 10 days, 15 days as well. But it has reclaimed the thin boy and looking to negate that cross down event from April 16th, which we also had pointed out to you. So are we starting to get this idea of a cross up event? Currently we are reclaiming 30,121. So we are seeing this strong support at 30K, this buying back potential, not wanting to break beneath the 30K level with a sustained move. And if we go to the 3-day time frame, we do have this average of the Williams suggesting it could come up more and go sideways, or at least let the average come up to it a little bit longer before a possible reversal or continue higher. We did reset some of the stochastic on the 3-day to 87, still overbought. Money flow is beneath the RSI, that could come up a little bit, giving that double top in an idea. Going to the daily. So the daily was having this Williams open up here and possibly suppress. We had the money flow come back to the RSI, and now it's above the RSI, so this could continue the suppression and open up this Williams here on the daily time frame. This daily cross down event just got started from last Sunday, so are we going to see this reclamation of that wick? This is what we want to see at the 29.5 region. It would be an ideal scoop. Is it too ideal to be true and they're going to send it from here? Anything is possible. Let's go to the 22-hour. 22-hour also getting suppressed here off some previous bearish divergence on the money flow and the RSI here at the highs. They did the stop hunt rise and then continued it. We are holding the super trend on the 22-hour time frame. Interesting to note, since back June 19th, so this wick off of that was exact almost. So if you're wondering why did we pounce at 29.7, well, there was a super trend level that's backtestedly true, and we're going back to 144. Let's go see what they're grabbing really quick on the liquidity. What did they ping in? Most likely those shorts, those 100xers, man, always trying to cut the queue. These 100xers trying to cut the queue, and they're just coming right back to them. So these 100xers opened up at 30,003 and 29.98. So those pools, these 88 million and 75 million dollar 100xers opened into this red candle, and so they are coming back with a fury to just gobble up the free money, because they opened up in the they opened up a short into support. Not a good look. You generally want to think about shorting up at the top of resistance, not at the bottom of support. So these neophyte traders are likely going to get gobbled here on the 30,195 region, and we will come back to that in a moment to say fatality to them. And yeah, if we go to the 12-hour time frame, 12-hour time frame, we were looking at this cloud kind of thinning idea and this possible bearish retest continuation and suppression of that baseline cross down event, which has been holding. We did see some candles closing above this first one, insinuating there could be this reversal shift starting on the medium to lower time frames. We already have that occurred on the 6-hour. We said watch out for that. So this could be your double bottom if you are looking for that double bottom play on the 6-hour time frame. So you could have this basically kind of playing out. If this holds true within the next 6 hours, we are getting this gobbling up of this liquidity up here at the 30,152. Did they grab them just yet? It looks like they did. It went up to 200, so we can just say goodbye to those guys, these shorts. And this is why price action acts irrational, because human beings are irrational. Opening up shorts at support like that, just not a very smart move.
Fatality.
Yes, and basically rest in peace that 88 million and 75 million. And their partners in crime are also open here up at the 50x region, so they could this could have been the reversal point to come higher. Let's go into the 6-hour, the cross up event, which is in play still. By holding this baseline, it could still take you to the promised land if you are in a long or looking for a long idea. The 30k support idea is pretty strong here. We're back to 30,200 as if it never happened. If we go to the 4-hour time frame, 4-hour time frame trying to reset in a manner here. This is where we got previously overbought. We also had some bearish divergence on the money flow. I'm not sure why this did not print, but we had basically some higher level of the money flow here, the disparity between the money flow and the RSI, and the fact that we did not break this range was bearish divergence to me. I'm not sure why the crystal didn't print there, but that was bearish divergence and overbought, so we started to come down. We are seeing the Williams reset in a manner here. We were talking about the ambiguity of these conflicting time frames. You have these lower time frames with the cross up event intact, and then you have the higher time frame of the daily with the cross down event intact. So which one is it? Which one's going to win out in the end? So that is the question. Seeing the 12-hour also give its possible suppression of takeoff here with the Williams coming down too. So you're getting these ambiguous contradictions between the time frames that are not lined up properly. If you look at the hourly time frame, you're getting all these vector candles on the hourly time frame, attempting to hold this cloud. We've been seeing this bearish trend-based fib level, not trend-based fib, this bearish super trend level been holding since Thursday, and we were talking about this pivotal point in the charts yesterday and holding this super trend if you're going to look for downside. So we have yet to negate that idea just yet. Hourly time frame is oversold. Williams also coming. It's interesting, the Williams has not been resetting entirely on the hourly. The hourly has come to a point and then plays out from that point, which is insinuating the bullishness. It doesn't get super suppressed on the hourly time frame. The hourly time frame has been fairly good at spotting scalp plays and swing trades, particularly on the cross down and cross up events. If you honor those cross up and cross down events on the hourly in conjunction with some levels and points of interest like this super trend, then this cross down event had you at hello here for a good, if you held it to a good like percent on some decent leverage, that's not bad. So using the top of the consolidation range plus the super trend and the cross down event on the hourly could have had you at hello. Also the 4-hour bearish divergence and the thick cloud here. So the thick cloud is also a volume weighted formula. This is what you use, the trend cloud, a volume weighted cloud formula, which expands and thins according to the amount of volume present in the asset. So when it's purple, it's a large selling volume. When it's blue, it's a large buying volume. And when it starts to thin, there's a potential reversal inbound for that idea. So the reset, this is a fairly decent reset. You had a stopping this purple volume on the PVSRA strategy of this vector candle. Idea is insinuating that this was a stop hunt, as it is not red in nature. This was more of a actual downside play red vector candle here. This purple one insinuates a stop hunt, and this is false move Monday. So are we going down to go up to this vector recovery of this candle here? That is the question. Going to the hourly time frame, the hourly one does print a vector because it's a different time frame, different candles in the math. So this attempt to buy back here with the red vector, extreme amounts of transactions and volume was taking place here at that level, at the 30,000 level. All right, so they came back, grabbed those 100x without hesitation. We just watched it live. So once they take the 100x, they also ping in some other 100xers as these 100x longs opened up here. So the longs that opened up into resistance, they could come back to these guys now and then rinse and repeat. And so does it offset this amount here at the 29 and 27 million pools of 100x shorts that were opened up down here? Or is it more valuable for them to come back to this? And this is where patterns become tertiary to the inducement of liquidity. So the amount of liquidity that gets induced, when it outweighs the other side, they go to the other side. And it just shifts and undulates according to what they induce in people. And so the people that are impatient and don't know what they're looking at, that short into resistance and become these harpooned wicks here of liquidity, then they take them to their demise. And conversely here, this harpoon wick here is harpooning some longs and dragging them to, like sirens of the sea, to the bottom of the ocean, to the rocks below. And so this is how the game of traps works, and knowing where to look for shorts at the top of a range with the 3 hits to the high, 1, 2, 3. This was actually a 4th one. These 3 hits to the high idea, we talked about the power of 3s, and same with the long idea. You have 1, 2, 3. Although you could come a little bit lower. This is why we're talking about this reclamation of the wick idea. If you come to this region here, you have the 3rd hit to the low yet to happen. You're getting all these fake inducement traps here. I would love to see it come back and reclaim this in its entirety. That's just me. All right, so let's go into the 15-minute, see what that's doing. We got the Asian range. Asia decided to preemptively dump, and then now they're doing their usual like pump into Hong Kong kind of thing. They like to, here's the Asian range, they pump it up, and then they they slowly fade it off to London. I mean, this is the weekend, so it's not a good example, but so we talked about that back here. We were talking about going, was that here? I don't remember which one day it was. Maybe it was this one. I remember we predicted this one because we said they normally pump it and fade it into London, and then London faded it with the fury into New York. So Asia, this was actually a big pump. They normally pump it for less. If they're going to fade it, they generally pump and then fade to London. Pump and fade. And then what does London do thereafter? Knowing your time frames and knowing the time zones of the liquidity pools that are in play, and how does Asia play to London, that which plays to New York? That is a good way to look at it. If you want to see this free indicator, this is ICT kill zones by Tradinator, and you just look at it from the 15-minute or below. As it looks like we are just snagging some liquidity and getting those false people buying into the, you're getting a lot of inducement right now of the long liquidity. So you're getting some longs opening up here and here and here. These little pools, after taking out the 100x shorts, now they come back into the 100x longs. And it's just fascinating to watch high block. If you don't have high block, what can you use? Well, there's this free indicator called liquidation levels by ML applications. You can set your threshold to 0.1, which is every 100x trader. And this will show the Binance futures overlaid onto your chart. Very brilliant idea. And it basically comes back and you see that they grabbed that 620K person here, this 100x, and now they could be coming into the 50x down below. And you could see which side was pinged more of. So you see this 100x trap being laid here, and then they came back, they wicked into the 100x shorts, they stop hunt rose and dropped it, and now they could be stop hunting in a larger time frame down to the bottom here, and then rising it up on a larger swing play. So if you're playing all these smaller time frames, you have these smaller plays, but if you're looking at a larger swing, you're waiting for a larger swing level. Hopefully you catch my drift. And so coming back into these 50x on this pool, which includes this wick idea, and then some of these get lost to father time because they are limited in the cash they can hold in their system. So for free, you get what you pay for, which is why you use high block for those other details. So I used this for quite a long time for free and noticed which dots were in more frequency and what amount was more, and oftentimes you can see there's more 100x on one side than the other, and then they go for that side. I only look at it generally from the 15-minute time frame and below. As you start to go to higher time frames, it leaves out some stuff. I'm not sure why. I don't know the math behind their formula, but basically it starts to paint a different picture. But it's an interesting little indicator, if I do say so myself. So as it seems, we are going back down after taking out those 100xers for being greedy and trying to cut the queue. Shame on you. Use a better leverage and a better margin. All right, so as we go back down to the reclaim this wick here, we could also see this reclamation in full. Would love to see some consolidation and some bearish overtones appear, and then more shorts enter the fray, and then we surge up to that 32K at last. For a sustainable move to the upside, you have to realize that there is how many days of consolidation here? There's 18 days now of consolidation. We talked about going to 32K would not take overnight, that we would most likely range trade in this range, and that was even 9 days before it was even 9 days in. And so, you know, if we are going to shift to the upside further, this consolidation is quite nice that it's trying to hold as support, granted, but you would like to see a sweep of the lows. We've said it for some time now. Sweep the lows, take out all of the longs, and then go higher. You go low to go high, and you go high to go low. This is a perfect example here. You go up, sweep all of this short liquidity up here, all of this buy side liquidity, and then they go lower, and then they continue lower. So all of the people that wanted to go short up here got scared out over here, and their liquidity got taken. They swept the highs and they came low, and so now they have to sweep the lows to go high. It's that simple. I mean, trading itself is not simple, but there are simple concepts about when you want to have a sustainable move to the upside, you have to go low to grab all of that liquidity that wants it to go up. Why would you pay all of these people, you know, for free, basically, for sitting in a trade for, you know, 18 days? It makes sense to take them out first. That's just, for me anyway, at my stage in the game, it makes sense to go sweep the lows and then go higher. You see it enough times. Even here, it swept the lows and it went higher. It swept the highs to go lower. It's just, you go down to go up, and you go up to go down. So if we are going up, we need to go down. We have not been doing that. We've been inducing a lot of the impatient folks. So coming down to sweep that liquidity to me makes the most sense. All right, so if we go to that 1 month time frame, just once again to reiterate, you have double digits, 12 billion at 29.4, 13 billion 29.3, 12 billion 29.2, 12 billion 29.1, 10 billion 29 even. So you have basically 10, 20, 30, 40, 50 billion dollars down into the 29K region that they could stop out without hesitation before making their ascent, if that's what they want to do. Granted, you also have those protected positions below 24K as well, which they allowed to pass for whatever reason. All right, so I think we did a solid analysis. I mean, this just, to me also, I was looking at this as like kind of it's like a C wave down. So consolidating well. So let's go see what the chat's got to say. Hey, what's up? Sunshine, how's it going? Let's go see how Seoul went from yesterday. I know somebody was talking about establishing a position in Seoul. Interesting. I've been recently messing with different ideas of fib. This one's like a fib time idea, looking at time from the impulse waves and then seeing like a 236 to 382 to 0.5. I'm just kind of seeing if there's any. It looks like it got tired off the 786 and the 886. But we were seeing the nuke yesterday on the live stream. I'm gonna take this off until I get some confirmation about it. But we were talking about, we were starting to come up here and got a nuke, and since that nuke that appeared on last time live on the stream, it basically had these cross downs, and you're seeing the cross down events start to play out, coming back into that retrace. I put out the idea of an extended M because, you know, basically when you are bullish, they try to stop out the majority of shorts they can and then reverse. So this could be a single leg before coming back up at certain point. But this is where the cross down events have you at hello. If you start to look at the 12-hour time frame, you had the cross down on that cascade upward. It started on the lower time frame. You started with the 4-hour here, cross down event. Even with the hourly cross down started here with that extended M on the hourly time frame, and then it maintained that cross down without crossing up again. And you could have held that from the range high, and the hourly has been good in terms of that cross down baseline play. This is why we turned the opacity down on our candles. How do you do that? Well, you go to settings over the eyeball of the asset, and you can change the body. I changed mine to 65% opacity. So the borders and the bodies of my candles are 65% opacity, as is the wicks. And that gives more prominence to the baseline events. So when the baseline crosses down here and you had that candle close beneath the baselines, that was your smooth, easy entry for a potential short for 5% downside on Seoul. We talked about possibly taking profits as we were getting that nuke, as it was wicking up into here. Even if you took the nuke at face value, which I didn't recommend doing unless you were not making higher highs, which I don't think you did. So you could have done that. Let's see what the higher high and lower low said. You made it on here, but you didn't make a higher high or lower low here. So yeah, when the nuke appeared, you could have just shorted that too, and then followed it with the follow-up on the cascading cross-down event. All right, let's see if you guys have anything you want me to look at. Do you guys have anything you would like me to take a look at in the chat? Please shout out a token or trade. Let's go look at the NASDAQ, see what that's doing right now. Looks like we're getting a sell-off in the Asian session, possibly coming to the equal low level over here at 113. Next level over here we have the 15K even region. If we even take that low down here, this idea, this 1529, This fib played us well when we used it, so it's done. Thank you. This too. So this could be why you're seeing that sell-off of BTC. They're having that retrace for the stocks as well. Let's look at the DXY. Starting to double bottom off some levels here. Let's see. We had a previous dumpage on Friday. Okay, so reassessing for the dollar. Dollar, once you had the previous overbought status, double top rejection of the bearish trend-based fib levels, respecting that 0.65 and the 706 trap door that opened up, boom, back down to the 1618 Hail Mary take profit level. So and this is the bearish trend-based fib level still in effect until you break that 236 level on the DXY. People obviously taking profits on NASDAQ and a lot of stocks like Google and Tesla and Nvidia. All of these tech innovations with the AI and everything is what's causing NASDAQ to have its upside plays. The bullishness that was one directional for the most part throughout May and a lot of June has started to turn sideways as people take profits. So it hasn't been as clear in terms of the volatility, one directional volatility where you could just short and chill or long and chill. Now you're having a little bit more ambiguousness as people take profits and reposition back in. All right, so the ES, let's look at the ES. We did not take out that. I'm gonna take off the higher high, lower low look back because I don't need it. So we had a reaction off the 618. We talked about possibly sweeping up into here and coming back to the 618 to bounce. We did bounce off the 618 level to a T on ES up to that level, and we are starting to come back for a potential double bottom idea off the golden pocket of this range. Looks like it's the same idea as Bitcoin. Come back to reclaim this wick, perhaps, on the 4-hour time frame. Ideally speaking, you would come back into that level to retest for support if that's where you are going to bounce. If not, you break down, you trade through it and break down and come to the next level, which would be here. 43.98, 44 even abouts. Let's look at the daily time frame. You had that cross down event with that extended M. They like to do, in bullish markets, they like to do this extended M pattern. So this extended M scares out the majority of the shorts when they are right, and then they come down after that fact. So they do an extreme bullish play after that first leg to make the extended M pattern. Okay, so the daily time frame getting oversold, similar to Bitcoin. You have the cross down event which could cascade. Money flow is beneath the RSI here on the ES minis, the S&P. So this could come back up here if it negates this as a double top scenario. You do have false alarms 1, 2, 3 that do occur in bullish times. So those are noteworthy. However, when they do play out with the cross down event, they do play out with the fury as well. So that's why they're alarming. Ideally, you want to position a long up in this region where you have the fertile crescent, as we call it, these valleys between the mountains with the fertile crescent and the water above it and the sun coming over the horizon, the rising sun, and boom, you can have this play out. Double bottoms ideal like this, where you got the rising sun in effect with two fertile crescents here, and boom, you can take it out to the upside on these daily time frames. When you get these mixed signals, it's a highly risky play. You're also at a premium price, so you could be looking for that daily swing short idea if this opens up in that manner. You do have a gap down here to take note of. This level, let's go ahead and take a look. So that's a huge kind of gap to fulfill from June. So are they going to start taking some profits and heading down into these regions now? They didn't manage to fulfill this gap that was over here. This is a very old one from 2022. Fair value gaps anyway. Trying to get a direction for the week. If we go to the weekly time frame, let's see how the week was at the top of the Keltner channel. Cloud starting to taper in a manner here, setting up with that cross down event on the Williams, perhaps getting to that point of overbought status on the Williams. Could get that suppression. Baselines are above the price on the weekly time frame. You could see one last hurrah, setting up for an M pattern formation of some kind, where it's kind of like, where does it go before it comes down kind of thing, to scare out the shorts without giving them that easy feeling just yet. So we could get a double bottom bounce on the 618, similar to this idea here. You get this double bottom, come up and then come down into here, and then this would be a higher time frame M, right? So like one last W hurrah into the second leg of the M, down to the gap. I don't trade ES, but it is similar in nature, so it would be the same idea going for NAS perhaps, and then also for Bitcoin as we retrace down into that wick. Let's look at the BTC dominance. Dominance looking to rise up to that region that we had outlined for you. We're holding nicely off of the super trend on the daily time frame since June 6th, wicking off that idea, which is also the 706. The 706 is that institutional level, which if permission is granted, they will continue higher on that. I don't know why that is, but 706 is generally pretty good as a fib level for a trap door being open to one side or the other. If we go to the USDT dominance, we previously talked about that idea of this ABC correction wave to the downside, this 1, 2, 3 coming to sweep the lows, go into the golden pocket once more. This is similar to what ES might be doing with this coming back to that 618 idea. Very similar in nature. Everything's fractal in nature, so you find the same thing across all assets. 65 to 80% of trading is all algorithmic anyway. So which came first, the algorithm or the pattern, the chicken or the egg? So the coming for this double bottom idea, starting to come out. They didn't quite get above the range here, so you don't really have a change of character. However, you do have shoulder, head, and possible shoulder as you reclaim this 200 weighted moving average. If this continues higher, this means people get kicked out into USDT, as we will see. Hold on, let's go into the lower time frame. Let's see what this curve was talking about. We were talking about coming back into a pattern here and possibly watching the cloud shift. It might have been the 6 hour, but I'm thinking it was different because it was the 12. There we go. Yes. So we were talking about the 12-hour time frame and this cloud preemption of the shift and continuation idea. So the cloud is a very interesting formula because it will give you this angle in advance. All right. it will give you this, it'll have this angle back here. All right, so as you're coming to this point, this angle will start to taper. And so when we came to this ATR and we're coming up to the cloud on this 12-hour time frame, and we're closing out a candle within the cloud, and it looks kind of fatiguing, and maybe we come up above the cloud and it's still tapering, but then we start to come beneath the cloud, like you could just say, okay, we're going beneath the cloud, I'm going to short, and then boom, like if this were an asset, this is dominance, of course, but you know, it holds true across all assets. When this tapers, it starts to show the momentum in advance. And so this could be the momentum of USDT dominance rising. And if USDT dominance rises alongside Bitcoin dominance, that means that people are getting kicked out of their trades in BTC into USDT, which either they're getting the other altcoin pairs are getting kicked into BTC, and then also those USDT trades of the altcoins kick them out into that. So seeing this shift of the cloud we're talking about, that would likely occur, the thinning would occur here. We have yet to come. We've been holding the cloud quite nicely. The baseline cross-up event is still intact on the 12-hour time frame. If we look at the 12-hour for that, it looks like it's coming up some more. You had the previous fertile crescent, double bottom, rising sun idea with bullish divergence on the RSI, suggesting that insinuation which we had for you. So this USDT dominance is continuing possibly higher. We did reclaim that cloud. The reclamation of the cloud is a big one. When you come back to the cloud, you come back to kiss it. We were talking about that kissing idea and possibly coming to that 618 for confirmation. And this cloud idea puts you here. So Monday could come back into that. Are people getting, it looks like they're already getting stopped out into USDT in the last 6-12 hours. So as the dominance rises and people get more into their USDT, that is what happened here on this wick. This huge candle was that huge drop to the downside for BTC. So that huge drop kicked out a lot into USDT, and that's where you juxtapose the USDT dominance versus Bitcoin dominance versus BTC. So if the dominance looks like it's of BTC looks like it wants to rise up some more, then we could see that this is poised to drop BTC. If we come down to this level, everyone in this range is going to get kicked out into the USDT. So this is the talking about the cloud idea once again. If we go back, the 6-hour cloud was giving us this taper back here, giving us the idea of fatigue and looking for those 3 hits to the high, which happened. So if you were so inclined, you could have taken those shorts, and it looks like we're crossing the baseline perhaps in the 236 region to come lower. If we go to the 12-hour time frame, this was where we had this thinning of the cloud idea. Now ideally we would like to see this wave here. You have A, B, if this comes down C to a lower region, lower being the key feature of knocking out all the longs, would be your ideal setup for divergence. Now then you got these vectors to the upside to account for, which would then set you up for that nice swing long idea. Not really interested at this level currently. I'm not going to be tricked into being induced, but maybe if you are unavailable, this is False Move Monday, they could do whatever they want, of course. So if we go to the liquidity once again, let's see what else has been pinged in, and then we'll take some, see if you had any requests for me. BCH, Bitcoin Cash. All right, I'll check out Bitcoin Cash and the VIX in a moment. Shout out to everyone here. So let's see if anything has pinged in again. Some 20 million, 33 million, 54, 25, 21, some more longs pinged in here. as opposed to less shorts now after they got rocked that 100x live, those 100x pool live. All right, so let's go to the Bitcoin Cash, BCH USDT. Oops. All right, so let's go ahead and start from the daily. Let's go from the weekly, actually, because the weekly candle closes today, so why not? So you had that previous rocket ship on Momentum Master setting you up for that position nicely. You had a false takeoff here in April that if you had taken it, you would just be getting out now, weeks later. So that was April 2022. That was in a bearish state. So that was also, oh, this reminds me, this was when and I was back testing the algorithm, and there was a false signal being shown in the month of April Fools and May with the Luna liquidation event. And so when Gemini opened up that short position to basically depeg Luna and that whole fiasco, that was where it should have bottomed, you know, and continued if it was meant to continue, but they just took it straight downside, and it was like all my oscillators were just going haywire, and I was like, what is wrong with my calculations? But it was, and then later turns out their manipulation to liquidate Luna was the main goal. So it wasn't my oscillators that were wrong here, and as proven by the other rockets, which did take off. So yeah, there's a story behind the false takeoff here, and it appeared on Bitcoin as well. So that was kind of interesting and gave me a headache when I was finding out it wasn't working. All right, so we came back above this range over this level. Let's just mark it off here so I can juxtapose. So we came to this top of this range on the weekly. It looks like we could be like creating a handle retrace idea to come back into test support on the weekly time frame. The weekly time frame overbought on the money flow and the RSI, although the Williams still could have you at hello to keep coming up with upwards momentum before this average comes to a point. It's an altcoin, so the volume and the jagged nature of the oscillators starts to change. You'll notice it's less smooth than Bitcoin because there's less liquidity in it. So the less liquidity you have, the less sensitive the oscillators will be. So it works better with more volume. So if you look at NASDAQ, ES, Bitcoin, these things will have more accuracy with these things. So normally it would come to a point where this average on the Williams comes up before this crosses down. It looks like it did honor that to a point and then came down after a certain level, but on Bitcoin this would be up higher, for example. So the fact that this 5-day shows it could still keep going, this shows that it could reclaim and keep going higher as it reclaimed this 200 weighted moving average on the 5-day time frame. If we look at the 3-day cross-up event had you at hello, and you're starting to reclaim that as well. You had the Fertile Crescent Rising Sun idea. That was a perfect idea. So here was another one, and yeah, and you're starting to see this possibly come up some more before a true retrace is inbound. So you could continue higher before you retrace completely. Let's go to you're also holding this adaptive moving average and the baseline thus far, although you are failing on the thin boy, expressing some slight fatigue on the 3-day time frame. Daily time frame has the cross down event similar to Bitcoin that was back in Thursday, and so you're starting to see this suppression potential of the daily takeoff, which is why the daily is not taking off here. You're getting the Williams alarm event starting to suppress the stochastic RSI. You have the leading MACD also bringing some downside momentum. And if you look at the top of the Keltner channel, you're at the top here, so you could come back down into the bottom or the middle cloud idea at the bare minimum here, which would also be like the top of that. Let's start to take a look at some bearish trend-based fib levels. How do you do bearish trend-based fibs? Well, you go over here, you favorite trend-based fib extension, you start from the top of this impulse to the downside, which is down to here on Wednesday, June 5th, and then you retrace back up to the top, which was a day later up here on June 6th, and that gives you your 236 entry model for a short at 284.5, which would have held true the next day on Friday and never to return. So we have yet to come back into these levels. If we are to retrace on the daily time frame, it would take you down to this level here. Oops, wrong one. Which also happens to coincide with the super trend. So if you don't even know fibs and whatnot, this back tested level also has you at hello of where conservatively to look. A 26.8 retrace idea down to here perhaps on the daily time frame if you cannot make it above this 236 at $284.5. Now if you go to the 12-hour time frame, whoops, 12-hour is being suppressed by the Williams reset. This is what I mean by suppression. So you have this 12-hour stochastic RSI reset in a nice manner here, right, off the 0.65. However, the Williams is dumping down on you with selling momentum, with bearish momentum. So this suppresses the takeoff of the stochastic RSI. If you're a stochastic RSI trader, you've often seen this suppression and wondered, why does it not take off? What's going on here? And this is why we also added the Williams to our arsenal on Momentum Master B. Having this Williams with the hull smoothing and the alarms with these back tested levels gives you that idea of you might be inbound for some suppression here. And so as this starts to come down to that green level and you get that double bottom idea, that's where you start to think about the fatigue being over. So are we over on that with the Williams? Not just yet, not in my sweet spot with the green fertile crescent just yet on the 12-hour time frame. 6-hour time frame could also come down slightly more. I would like to see it, and this downside would be nice to see as well. 4-hour time frame also oversold, getting there with the Williams. You had money flow divergence, hidden bearish, which started to play out. And if we go to the hourly is starting to get the rising sun. You might have an hourly play bounce idea inbound for Bitcoin Cash. Let's just be accurate as can be, moving it to the wicks. And yeah, so if you have, these are where you get resistance levels on either side of the equation. So if you were in a short from the 236, like let's just say you took it from here, and then you took it, and as it gets to a level, like let's say it gets to the 0.65706, you'd expect some sort of reaction here. So at the equal low of this. So you can consider taking profit and setting stop into profit, and then it will do some meandering. We've watched that on the live with Bitcoin, and it even happened with Bitcoin here. We'll come back to this in a moment. But with this 706 of the bullish trend-based fib, we've been seeing that resistance at the 786 level. So that 786 didn't take us up into the golden pocket just yet. So this is where you find resistance and consider taking profits from your 236 entry. And so that's the idea of that trend-based fib. So we're going to go over that really quick. So what you do with your fibs is this. This is a quick fib, trend-based fib lesson, fib extension lesson. So what you do is you have your impulse, in this case bullish, met with a retrace, okay? And that first impulse with your retrace will give you some math like this. When you shift the impulse, it's going to change the math accordingly. So, and then when the retrace also tells you where that 236 is going to be. And so that 236 is your entry model for upside. And then when you take that 236 to the upside, you would take it in a manner and then look for resistance off the 786 region. And then if it consolidates here and then it gets a candle close above the 706, then generally you rocket up beyond. I have a trade idea that I took a long time ago when I was back testing these fibs, and that was with Sol back in the day. So we're going to go quickly back in the day, and you can see where that occurred. I have it saved, went from private lessons I used to teach back in the day, but we're just giving it out for free. We don't need to what's the word, like charge for this. It's completely free, and you can back test this yourself. All right, so if you go back to October 19th, 2021, Sol was in this. This was back when I was more of a pattern guy, as you can see. So there is a point where it was consolidating and getting mighty tight to continue higher at $155. And if we go into the hourly time frame, we had a bullish trend-based fib level with that 236 idea in mind, this impulse retrace idea coming to this point. And then it was getting tight within this range, and boom, it shot up, and then it went up to the 0.65, and then it got a candle close above the 706, and then it was gone into that nice region that we just talked about for the take profit, and even went to a Hail Mary play at the 2 level if we stayed in it. And these could be areas where you take you put your stop into profit, so you can move your stop into profit at one of these levels, like the beneath the 786. It never came beneath that point, and then it just went higher, and then you can move it up to the 1382, and then it stopped you out there. But yeah, you would consider taking profits along the way as you reach these levels. So it's like a map. It's a weird kind of map, and the bullish trend-based fib levels give you that kind of map idea. Let's see, where did I put that? So yes, the bullish trend-based fib idea, these bullish trend-based fibs, rather than take a pole and swing it over, you can use math in your favor to find take profit levels rather than do something like this. Granted, if I take the pole, the impulse pole, and swing it over like some YouTubers do, it'll take you up to that general region of your take profit, but it won't tell you about resistance levels. It won't do that. And so you'll sometimes see it fatigue off of here and come down, like get rejected off the 706, for example, and then come down off that point, and boom, you have an M pattern, and you're like, what? It didn't go to my measured move. Well, it did go to a measured move within the measured move, and you should have considered taking profits or setting your stop beneath that line, so you would have gotten the maximum impulse. And so that's how trend-based fib levels work, and they do work for a entry model and confirmation of your idea. All right, so let's go back to Bitcoin Cash to show you why I put that there. All right, so the 236 entry model holds true, and then you're still bouncing here, and you know, if you had entered there, you just like basically are in safe for that short, and then you'd expect to see some sort of reaction down here. You are getting 7 time frames oversold here on multiple indicators, so you could see a bounce. I would look for some sort of, once again, 3 hits to the high. If it is a valid short, you would get like, this would be your first hit, and then you'd expect some other hits up here in this region. The daily time frame is oversold now, so that daily in conjunction with the 4-hour right now and the hourly play, you could see a rise up to at least attack the highs one more time, and then you look for that entry model again. Weekly time frame is a bit extended, but this is where the power of threes comes into play, because generally you get like 3 hits up in this region. So we have yet to see a hit up in this region again. So you do have shallow M's which do start to play out, but if you're reaching this oversold status across multiple time frames like this and you've only gone down shallow retrace, not even hitting the 6.5, this could be a bullish idea too. And conversely, you should do both sides of the equation. Got to do its, got to give it credence for where it wants to go. You know what I mean? So let's see. You had this impulse to the upside and the retrace to the downside. So you could take that to this level here. And if you get above this 236, so basically this is your interest zone. And then most likely if I do like a fixed range volume profile, it's going to be something like that too with your point of control. The point of control's up there. But if you start to get up above this level, then you have some ranges that it could come back to hit that high again. So it depends on what type of scalp play or swing play you're looking for. A scalp could take you up for a second hit to the high region, conservatively at 317.8, and then that would be a 4-hour play up to there, possibly fatiguing off of some of these points, and then possibly either coming higher off the 706 or going lower back down into these. And this is how you look at like range trading, right? Like you could basically like scalp the living daylights and not hope for one side, take what it gives and let it hit you out in profit and look for the other side of the trade. So that's Bitcoin Cash in a nutshell. It looks like you have some ambiguousness and some larger time frame fatigue potentially setting in at some point to these regions. All right, so let's go to the VIX. Somebody wanted to look at the VIX. I think it was CNC. Shout out to CNC. So you had this rocket ship kind of play out. My dad used to use the indicator with the VIX and everything, and he liked to see these rocket takeoffs. Even when they would give you slight takeoffs, they would give you a decent amount on the daily time frame. You are getting overbought here. So the VIX, when the VIX goes up, I believe it's when everything goes down, right? So you had previous rocket ships playing out as things started to retrace, like the NASDAQ and the ES coming down as the VIX. It's expressive of volatility, of downside volatility. When it goes up, it's down. It's countered the market. It's inverse of the market. So this was going up as things go down. We reclaimed some of these gaps here. The bearish trend, which is the bullish trend for everything, is still in effect. You're getting more rockets that don't play out than not. At some point here, you do have cross-up event with the rocket ship that's starting to play out here. This is also telling the same thing. You had bullish divergence on the RSI, fertile crescent. You see that double bottom with the rising sun. You see it over and over again. This is what you want to see with bullish divergence with the rocket ship. That was a really smooth idea to think about with the ABC. You got the A, the B, and the lower C. This double bottom idea with the lower second bottom like that, and then this making a higher double bottom with the rising sun. That was a good daily play on the VIX. If we look at the VIX in general, the weekly still has time to go up as the thumbs up is showing. If we go to the 12-hour time frame, 12-hour is overbought and meandering on resistance here at the adaptive and weighted. Also coming up to, we recovered that fair value gap, wicked up into this candle here at 1708. We wicked up into the fair value gap on the 12-hour and came back down. Is this a shoulder, head and a shoulder out of here with the cup and handle retrace in idea? If we look at the 6-hour time frame, This could come down a little bit more. You had previous bullish divergence on the RSI play out with that wick. 4 hour coming down in a manner here above the adaptive by the looks of it. So we're got a cross down event inbound, so you could come down and look to see if a wick comes down beneath this ATR and gets bought back up. If we hold this 4 hour super trend at this 1386 level, then it means that this could continue to the upside on the 4 hour time frame. So the 4 hour cross down event, what is the 4 hour cross down event going to do with this last bit of momentum to the downside on the Williams and this stochastic? Is it going to, the downside for the VIX would be a burst for the rest of the markets to the upside. So the downside for VIX would mean a bullish inbound play for ES and for NASDAQ and whatnot. So if it comes down to here and then gets bought back up, then it could be another dump inbound, or it could just come down and double bottom, triple bottom here. So the 4 hour cross down event is in play. Same with the hourly. The hourly has had you at hello. Hourly cross down events are pretty good when coupled with higher time frame points of interest. They tend to kind of have a momentum to them that does play out ever so slight, at least for a few hours, which is all you need for a trade in the stocks. So this cross down event is attempting to reclaim the thin boy and start to shift the narrative out of this suppression of that with the hourly time frame. You're also at adaptive moving average on the hourly at the bottom of the Keltner, and you are getting 5 time frames overbought here. So yeah, the daily time frame wants to come down as well. So you have that daily time frame possibly pulling this down on the VIX. Let's go back and see what the daily time frame, I don't think I did it justice. We did talk about that cross up in the baselines, and you do have that little bit of burst up higher. The RSI is above the 50 level. You don't have money flow on this because this represents the volatility and there's no volume attached to it, although just like Bitcoin dominance, it does play out. So could you bounce, be reclaiming a bullish level to continue higher for this last bit? You do have that fertile crescent rising sun idea with more momentous, and that leading MACD in the domain of the Williams also looking to rise together, which could actually come up even though you're overbought. So there is this bullish undertone to the daily, which still is in play technically by holding these baselines. All right, so it basically comes back to what does it do with this 4 hour suppression and the hourly flip? So you could be coming possibly a little bit lower and then go higher at some stage if we go into the hourly time frame. Hourly wants to take off though, so that could be your hourly play, trying to push up a little bit higher here. Does the hourly get you above this super trend on the hourly time frame? This would insinuate that, you know, drop of the stocks and drop for Bitcoin if it comes up to here, and then does it get then bought back up for that double top scenario, scaring out the shorts, and then go down at 32K or whatever, and all of that other stuff. There's like a gap over here by the looks of it. Yeah, there's a gap at that level at 1383. So the hourly play plays out, and then the 4 hour cross down event takes you down perhaps, and then maybe you don't get this cross up. It all depends on if this cross up locks in. It might get locked in and then come back down again. So the 4 hour time frame still has that cross down event and that little bit of momentum to possibly take you down, but it could go up for that little bit of test of the baselines and this resistance at the weighted moving average. And that's it for the VIX. Let's go back to Bitcoin, see what's going on here. Still getting bought back and playing around with the candles here on the Asian range, getting a cross-up event on the 15. You had previously came up and we saw those guys get gobbled up on the 100x level. Let's go see who they pinged in one last time and bid you adieu. So they have not, let's go zoom in and see what's going on. 20 million down at 30,107. The next pools are up here if they're aiming at the shorts at 244. These little 100x guys that they left on the table. They're partners in crime of these guys they gobbled up live at 30,509 if they're going to continue higher. Or are they trying to ping in more longs by this show of strength here? There's not that many pools entering. There is more shorts that entered off this than longs, which they came back to their 100x friends. Are they trying to ping in more shorts to make the move justification to go higher? This is False Move Monday, and Asian session generally lacks the conviction to send it so much. This was algorithmic in nature over the weekend, but the Asian session generally pumps it to fade into London. So if you do see a pump, you'd be looking to see that fade into London idea. It is Monday, so be careful. False Move Monday. We are holding the 236 range of the bullish trend-based idea, which we just went over how these trend-based things work, which is basically range bound in nature. So you could look at it like psychological highs and lows. This is like your psychological low to go higher if you are going to go higher, or it's the threshold to go to a different region down below if you break it. So we have yet to break it on the hourly time frame. So this is potentially seeing an hourly play here for Bitcoin if we can hold this 236 level. 30K is acting as a strong support as of this moment in time. We did see the red vector appear as a spinning top here with wicks on both ends. We are getting beneath the adaptive on the hourly. How does this hourly cross down event play out? It's not necessarily my cup of tea for longing unless the baselines get beneath the price like this. This is more of a idea that you want to see where the baselines get beneath the price and cross up on the hourly time frame. As it stands right now, they're acting as suppression to the hourly. So I'm not really keen on this takeoff right now on the hourly time frame. I'd like to see the baselines come beneath the price in this manner like Friday, and then you could see that scoop de loop, which would mean it would be a double bottom. So it would play out and then come down again, and then you'd look for that confirmation idea. If you look at the 15-minute, it's attempting to do that now. You're getting a lot of false signals with the cross-up events. The cloud is quite thick, which is why you're seeing this wick idea as the cloud is tapering in a manner here. It looks to be trying to hold 30K as a support structure. If you look at the 5-minute, you're seeing this cloud play down, still in a thick manner. Let's go back to the 6-hour and above and then just give you that overtone. The overtone of the 6-hour is showing this sell-off idea, starting to thin from back here, but still possibly getting that 4 hours. You got 4 hours to see if this closes. Does it if it closes above the 236, you could be seeing this upside attack. If it closes beneath the 236, you could be seeing the downside attack. So it's all about the 30K level, 30K 19 and 30K 69. Within this $50 range, what does it do? That is the question that we are waiting to see. Your guess is as good as mine, so you gotta pick a side and take it. Personally, I'd like to see that wick reclamation down here at 29.5. I think that's a frugal thing to think. I showed you why with the ABC correction wave to the downside. Take out all the longs, take out that liquidity on the monthly. I gave you all of these ideas, and then but also warned you that there is that $450 billion up at 32K that they will eventually go back for on the external liquidity range. So you got to be careful on either side you take. With that, I will leave you, bid you adieu. Thank you for coming on in. So thank you for coming on in and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in, and we will do the same, bringing the fire, the precision, the accuracy, all that fun stuff, and we will catch you on the flip side.